Greetings. Good evening. This is Jeff Scott. It is October 5th, 2014, and welcome to this week's rendition of my weekend review. Before any further ado, let's just take a quick look at the futures, which you probably are aware may be up a little bit. Keep in mind that this is a concern, the surging dollar, and we'll talk about that as we go further. But the pre-markets show that some follow through from last week, at least on the S&P, the NASDAQ, and the Dow. The Russell is kind of flat right now. As always, I put a title on the program, and today I've called it To New Highs or Not. Last week I said I was looking for a top, which I guess is synonymous with say I was looking for it for the market to pull back. But I also in the second slide said that we really were at sort of a fork in the road. And we took the turn towards the breakdown, but a funny thing happened on Thursday, and you should have seen me at Subway on my cell phone closing out my short positions at lunchtime when the market reversed. And now the question is, do we continue up and perhaps set new highs, or is it a false breakout, or not even a breakout yet, a false improvement, and do we ultimately pull back? So a lot of ideas. Let's go see what the data says. Disclaimer, as always, this is for educational purposes only. Anything I recommend is in the spirit of education and should not be considered nor taken as investment advice. I'm a doctor, not a broker, and I am truly independent. I pay for all the tools that I use, and that gives me the flexibility, I believe, of and I feel it gives me the flexibility to say whatever I want to say. I always like to talk to people about becoming your own guru. There have been a lot of key influences on my style. Woodward and Brown, O'Neill and his disciples, Morales and Catcher, George Lee, John Person, Bigelow for candlesticks, Alexander Elder. Many of their key books or recent books are here. Some of the websites I use as well. I have many different programs. I have more programs than I use. I'm sure no one else is like that. Ha ha ha. But I would like to say that there are certain things that I have to use, whether it's TradeStation or Thinkorswim for trading. I use both. I use Genesis for monitoring the market real time. And then I use HGSI for my market analysis, EdgeRater or ETF Bandit for a number of different things. I'm a big fan of seasonality, and that could be Magenta, it could be Best Choice, it could be EdgeRater. And then I use MarketSmith to sort of validate a lot of the things that I see. I always start with this, and clearly we've been living in and around that red circle for some time. And it really felt that this week we were jumping down further along stage 4 of fear. And just as I was short the market and making money on Thursday and Wednesday to the short side, we saw a dramatic reversal and what appears to potentially be another leg up. And frankly, this entire last several months have been 3 to 5%, get to the bottom here where my arrow is, sort of where the circle ends, and then another run up. And then we do the same thing and then another run up. And it's been tough for trend followers. It's been tough to make money. The Russell's down for the year. And a lot of it is we just don't get long trends. And we get these mini pullbacks while we're all waiting for the big correction. I think, I use a lot of indexes to give me a sense of what's going on. And I think they tell the story. If you look at Ian's Canaries, struggling to get above the 50, but they did come well off their Thursday lows. In fact, they closed up on Thursday, really hit their lows on Wednesday. We can look at the LLURs from March, and they've really broken down. They did touch the 200-day moving average on Thursday and rebound, but they're below the 8 and the 50 and the 17. They got a lot of work to do to get back above the 50. And then the most recent index is one that I did at my meeting that I held down here in Florida in June, and it too got hammered this week and closed down substantially below the 50. And right now it's going to have to get above that 8-day and then above the 50 to make me a believer. Market thoughts, we had a pretty impressive reversal day on Thursday. The major markets need to retake their 50s quickly to keep this rally moving. I saw more good-looking setups when I did my bottoms-up review than I've seen in weeks. I'm concerned about the dollar. It's at a 36-month high. This has led to falling oil prices, which has brought a lot of the energy stocks down, and gold and silver are falling further into their abyss. Healthcare looks to be working, as are interest rate sensitive, some internet, and perhaps some financials. Here's some thoughts on healthcare. This is a business that I know a lot about. I said in these webinars, I said from podiums, that at least short-term Obamacare is going to benefit anybody that relies upon volume. Think about you're a business person and you have, say, 300 million potential customers, and 50 to 60 million of those customers have no money to pay for your services. Well, you can either provide your services to them at a loss for free, or you can refuse to give them services. Now, if you're a hospital or a healthcare provider, you don't have the refusal as an option. So you end up treating 20% of your population who don't pay. Obamacare, now they all pay. So if you're an insurance company, if you're a biotech, if you're generics, if you're hospitals, if you're drugstores or drug distributors, you have a good chance of benefiting from Obamacare. So I've listed some of the best looking chart patterns in those various entities that you might want to review. Historically, healthcare has been resistant to recessions. It's held up well in most market scenarios, such as rising dollars, rising interest rates. Obviously, the stocks don't always hold up if the market gets slammed, but I went into medicine because I knew it was a job that would pay well, that I'd always have a job and never be out of work. And I think there's something to be said about healthcare. Now, the Ebola fears may drive some irrational exuberance in certain companies. You got to be careful with these. Techmira, especially, should not be considered more than a trading vehicle based upon the Ebola scare. And the minute that scare goes away, Techmira probably comes back down. If you think about their Ebola story, they have a non-proven drug in early clinical trials that was put on a clinical hold by the FDA. That could be for many reasons, manufacturing issues, toxicity. But the reason why the stock has rebounded is they took the hold off and said that they can use it in patients who are already suffering from Ebola, which is great, but as far as I know, we have little data that the drug actually works. The one that saved the 2 healthcare workers thus far in the U.S. was from MAP Pharmaceuticals. The more Ebola, the more likely these things go up. Frankly, Ebola is going to drive volume to all the things above where the arrowhead is well. Now, the bearish case on healthcare is different. I mean, if you look at the GDP, it was revised higher in the second quarter because of rising healthcare expenditures, which are estimated to be 20% of our GDP within 10 years, 7 years. Now, what that means is 1 out of every 5 cents of spending is going to be towards healthcare. That would be the highest in the world and not sustainable. So ultimately, Congress or someone's going to have to do something to reduce costs, and that will pressure everything on this page. But the thing that bothers me about Obamacare maybe not be what bothers you. What bothers me is that there's nothing in it to reduce or control costs. It just increases the number of people whose health care is paid for, which is good if you're a physician. So as always, this week I'm going to trade the market we get, not the one that I think we should get. I wonder, what's the upside here? And is there a lot of room to go higher? There's still a risk of correction, although we are now through the first 5 days in October. If you think about October, it's usually a positive month for stocks, but many major corrections have occurred here. Thoughts on how to handle might be cash and probably smaller positions. But I'm seeing a lot of newsletter writers converting from going to cash and small positions to now starting to build on the long. A couple of updates for you. October 11th, I'll be holding a one-day meeting here in West Palm. The price is $200 including lunch. I downgraded from a expensive to a lower expensive hotel for the meeting, which saved me money, which I can pass along. I anticipate no more than 8 to 10 people. It will be a rehash of much of the stuff that we covered in the June meeting. So there will be a review if you attended that one, plus some new things that we can discuss and review in HGSI, TradeStation, and Thinkorswim. Hopefully you'll stick around for Sunday and Monday for the John Person Summit. I know many of you are going to PV. I wish I could be there, but I'll be with my lovely wife in Australia. And then I am pleased to announce that I've made the commitments. February 7th to 9th in the West Palm Beach area. Again, I'm negotiating with 3 hotels to get the best price for you. George Lee will join me as the main speaker. And if you email me, hgsidoc@gmail.com, I'll give you more information. This will be the 3rd meeting, the 2nd I've done with George. They've all been great meetings. A little bit about what we're going to do on October 11th. Like I said, small group. I've opened it up right now to anybody. And it's really about becoming your own guru. It's about the philosophy and tools of HGSI, learning the best of other gurus, finding your star trade, money management, and putting it all together. And we'll hand out screencasts and the presentation files themselves. Well, after a couple of weeks where in September being the weakest month, you can see that over the next month, the S&P's been up 13 out of 20 years, so that's leaning up positive with a 2% average return over the last 20 years. So we've gotten out of a tough month of September, but as I said, there's still an opportunity for us to see a pullback. This is seasonality and edge rater taking a number of ETFs and asking, what is the performance over the next 2 weeks, month, and so on and so forth from today. And I highlighted up 1 month to see how many of these had a lot of positive months. No big movements up or down. China, 6 out of 7 years up 5%. Metals, oil, and gas, good luck to that happening. These guys have been under a lot of pressure. From a news and earnings, mortgages, crude, natural gas, claims may move the market. Not a lot in earnings. Yum is always a nice intro to what's going on with Japan, as Yum Brands has, I guess, KFC and Pizza Hut, I think both, in China. All right, so let's review what we saw last week. Now, from the top, I got to tell you, last week was tough on high growth stock investors. If you look at 926 to 10.3, no filter, and I look at the various groups that I track, you could see almost all of them were red. The S&P 500 was down 0.75%, which did much better than the IBD 50 minus 1.6, the GIF All-Stars minus 2, the HGS 100 minus 2.77. So this was a tough month or week rather for growth stocks. Market Smith 250 growth down minus 0.94. Now much of this occurred, or some damage occurred, Monday morning, and if you take from where they opened Monday, it looks a little bit better, but bottom line is the week was a tough week. No Hindenburgs, and frankly, you're not going to see any Hindenburgs because the number of new highs is 0.28%. They'd have to be above 2, or 2.2 rather, to get a signal. Buckets, well, we've eased off the severely oversold buckets. Still 15% below the lower band, but you could see on 10.2, did I copy the same one? Let me fix that. My bad. Well, I probably can't do it right now. Let's see. I hate when I copy the wrong thing. My wife would say I'm doing too many things at the same time. I would say she's right, but she's always right. This is what I wanted to show you was Thursday, which I did put it on the HGSI blog saying it was like in the bottom 1% or the worst 1% ever of oversold, where we had 35% of stocks were below the S&P 1500, below the lower Bollinger Band. That was sort of similar to what we saw a week before on September 25th. And with the rally, we're a little bit less oversold, but we're still oversold by buckets. The markets still red, but we got to see some yellow. And what I mentioned last week, I think, is we need to see a line of these blue kahunas to sort of tell you that the market is changing. But you could see over the last couple of weeks, this is total confusion as we're getting shots of to the upside in blue and downside in the red, and really no consistency. So I'd say at best we're in chop or still on a sell signal. Plenty of signals from George Lee and Morales and Catcher, which we'll skip for right now. I really love the seasonality tool within EdgeRater. And if you look at over the next month, these are stocks from Adobe, Apple, Crestwood, and so on and so forth, down to Stereocycle, that have 11 out of 12 positive years with performance ranging from 3% to 9% over the next 4 weeks. So clearly there's some things out there that we might want to be looking at or nibbling. At this point, I usually like to take a look at my person indicators to get a sense if I'm getting any signals that I can be buying or should be selling. So let me bring that over here. Not my person, rather my elder, I'm sorry. Got multiple screens, so I just got to grab things and move them over. If you remember correctly, we're looking at the color. Green is a okay to buy, red's an okay to sell. I shouldn't be buying on red. I shouldn't be selling on green. And blue is sort of non-directional. I can do and pick whatever makes sense. So let's start with the NASDAQ. NASDAQ was up over 1% on Friday, and you could see a big move here off the red. Now, if you look in the past, when it's switched from red to green or red to blue, it often corresponded with a pretty significant move. So certainly looks more promising on the daily. Still red on the weekly, blue on the monthly. That red on the weekly will take a little bit of healing for it to get up there, but it tells me to be cautious. The blue says I could go long if I wanted to, but like I said, I'm cautious here, although my bet is that the week ends up positive versus today. The Dow, same thing. Look at this big reversal candle here. Way oversold at this point. Big blue, blue, blue. Clearly the Dow looks like it's rebounding, and we hope to get another move up to the top of the envelope like we saw back in August. Blue means you're free to do what you want. The Russell, up on Friday and Thursday, at least blue on Thursday and Friday, but still red on the weekly and monthly. So far from saying all clear, still perhaps some caution should be taken. And then the S&P, you can see a little blue today. Now this dot here suggests that on the person futures, maybe we have a new buy signal coming in on the daily on the ES. So let's see. Well, so I have to open up that one. Oh, something interesting to show you. So on the 60-minute, there's a buy here. Came in on today, and also on the daily. So I'm getting a buy signal on the daily signal on person's pivots. That's nice to see that. But this is perhaps more compelling. I haven't looked at this in a while. This is the Commitment of Traders report. It's done on the E-mini contracts. You can get this from John's website, or you can have his indicators and do it within Genesis or TradeStation. Yellow are us, the individual speculator. Blue are the professional speculators like hedge funds. And red are, these are people that are not doing it for the investment. They're doing it more, say, to hedge. So, for example, if I was a cattle farmer and I was concerned about the price of my cattle, I might be buying a futures contract to secure a delivery price. So I'm more concerned with the relationship of the yellow and the blue. Now, you notice when the market went into Black Swan, the blue was profoundly negative, yet we in yellow were buying the entire way down until, of course, it got to a bottom when the individual buyers disappeared and the professional speculators went deep in the market and the market turned around. And what I'm looking at here that's kind of got me intrigued is this. The last 2 weeks, the professional speculators have gone long the S&P mini contract. That's a big deal. And that suggests that perhaps the professionals think that this market is going to get ready to go up. I will point out back here that the professional speculators went long before the market bottomed here in 2009. They were going long in November, but at that time the market sort of changed its tune somewhat as well. So that's new stuff, pretty cool. The buy signal on person as well as the commitment of traders report. Be interesting to see what happens. All right, so a little bit of tepid enthusiasm. My enthusiasm more positive by what we just saw with the commitment of traders report, the futures being up, and a little bit more negative because of the red bars on the weekly and monthly on several of the major indices on my elder indicators and TradeStation. Let's take a look within HGSI. So first thing I'm going to do is I'm going to size my warehouse view to fit my screen. And I'm going to go into Major Markets Plus. And I'm going to look at a T1 view. So the T1 view looks at mostly the last day, a little bit of the last 5 days, and just a small amount of the last 3 weeks, and calculates all based upon technical factors, what's leading the market. So I sort them on raw combo. And the first thing I notice is that the U.S. dollar is on top. Well, we all know that force is positive. It's got to be accumulation. Direction is up. Velocity is up. Bongo daily and weekly. I wish my stocks all had that. And was up 1.3 for the week. The dollar is not historically great for stocks, especially stocks that do business ex-US, where it makes it more expensive to do business there in local currency terms, and the rising dollar makes our goods more expensive ex-US as well. I noticed that silver and gold and oil are on the bottom. We already mentioned that. Well, that's what the strong dollar will do. And the indexes are in the middle. So let's take a look at some of our favorites and get some ideas about where we might want to see the market go this week. Again, I got to size things here because I changed monitor size to do this video. So this is the S&P 500. I'll switch out of this view in a second, but I want to comment on a few things. One, kahuna on the S&P 500 on Friday. That's meaningful. There were eurekas on Thursday. I guess the prior Wednesday or Thursday as well, 925. So not eureka, there are two phoenixes, which are to the negative, which are a irrational exuberance perhaps to the downside, or at least follow-through days to the downside, suggesting further weakness. Now, go to a cleaned up chart, and let's see about some targets. So again, as I always talk about, if you are long, you're a buy and holder, and you're looking at this weekly chart, there's a lot to like. This is going back to September of 11. We haven't visited the 50-day moving average since June of 13. and we haven't measured the 200-day moving average. We met with it since September of 2011. Those are both a long time. You can see here we had a long bar down on the weekly bar this past week, but it's still well above the 50. So if you want to be a perma bull, you have good reason to. I'm concerned that perhaps what's what I'm thinking of? The height of the slope has slowed this gain, and we've clearly have also had a pretty substantial recent sell-off from top to bottom of, I think, 4.5%, 5%, 4.6%. Now, I really like what we saw at the end of this week, where we had a long-legged doji here, opened and closed at the same place despite a big sell-off during the day, and then we had a bit of a gap up, sort of a morning star formation on the S&P. That's bullish. We stopped at the T-line, the 8-day exponential, and really for me to be a believer, we're going to have to break through that 8 and that 50-day and ultimately that 17-day for me to believe that this is for real. There's also a concern I have that we could run up to that 17 and head back down. So I think getting back above the 50 and that 17-day moving average are important. If not, we run a high risk of either failing right now or failing if we can't get through those moving averages. What is my upside? Well, I guess my upside is to go back and look at recent highs. That's probably where my upside is. So I think there's, equal chance we go up as we go down, probably more chance we go up. But I'm going to still be looking as we approach these 17 and 50s for what might be natural resistance areas. Let's take a look at some other indices. That was the S&P. Let's take a look at the Dow. Stronger, got back above the 50, closed underneath the 17. Similar formation here. It did touch the 200 in August, didn't get there this time. The NASDAQ, again, similar formation with the long-legged tail, bottoming tail on Thursday, gap up on Friday, very positive day, although the volume appears to be less than it was earlier in the week. And then lastly, the Russell 2000, which had been the weakest, which had a big bounce recovery on Thursday, closing up a lot Thursday, and then trading up again on Friday. But it too is well below multiple moving averages that it's going to need to fight through to break out. The dollar, big move, even more, this is where it was last week. And from last week here, it's been a substantial incremental move as well. Now, the thing about the dollar is if you go to weekly, you can plot certain areas of potential dollar resistance or weakness. So one of them I thought was going to be in this area here, where we sort of had a double top back in 2013. The dollar jumped right through it. So now I get back to the 2012, and the dollar is right about up to that. If we don't turn around here, let's just go to the week. This is the weekly, I'm sorry. If we don't turn around here, then we've got that one to deal with. So that takes you up to about here. So the dollar's got potential resistance, but each time it breaks through one of these, it's taken out multi-year highs in the dollar. There are some people like Kudlow that think a strong dollar is great, and there's probably many reasons. It's probably going up because our economy is stronger. It's going up because it senses interest rates are going to go up. But as I said, it may cause a headwind on some of the U.S. companies. It also will not help silver and gold. Here's gold with a bingo, as you'll see in this. Oh, you won't see it on this chart, but there was a bingo here. High volume. Maybe this will be an island reversal and turn around this week. If I look at weekly, you can see gold is on support at 115. So this was, in July 13, where gold bounced. I'd like to see it get above the 50 before I'm a believer, but that is long-term gold support. Silver, similar picture to gold. U.S. oil as well, another picture of weakness related to the dollar. Next thing I do is I drive down to the industry groups, of which I have 177 in HGSI. And let's take a look at two-day force. And I can see that on the two-day force, I've got 72 of my 170 groups are to the upside, and the two-day force down is just 2. Now, I have had George Kodas, the 5-day force, which gives me a little bit bigger picture. So, for example, the exploration, oil services, and precious metals, integrated oils, semiconductor, steel producers, they're not captured by the two-day force to the downside, but each of them have been weak and were captured by the 5 days. If I look to the upside, they're pretty much overlapped. So let's just go through some of them. One of my favorites, biotech up at the top, so let's look at a couple. So here's Techmira. Like I said, being driven by hysteria related to Ebola. Now, I've watched the movie Outbreak. Probably some of you even did as well. There was a, what was it? Contagion or something? What was that? Well, there was one this recent year, and there was one a few years ago with Dustin Hoffman. And they're about widespread of a virus. And if you think about it, if Ebola became an epidemic in this country, it would affect everybody. It would affect the airlines. They'd all have to shut down because we'll close our borders and close our airports. It would affect the department stores. No one's going to go shopping. Anything that you spend money. You'd probably see the dollar weak and gold and silver go up in the setting of the fear about Ebola. And anybody that promises a get-well-quick scam or treatment will go up as well. Techmira is a very interesting company. They've got a portfolio of RNA-based therapies. They're interesting and exciting, but they're getting a little bit overbought because of the hysteria related to Ebola. As I said before, their product does not have much efficacy, which is data to show how well it works, and it was just taken off a whole by the FDA, which add this to the Ebola concerns, it's caused the stock to go up. I'm not saying it's not going to go up. It could go to 50 or 60 for all I know. Just make sure you know you're playing with fire. And look what happened back here where it reversed and came down hard. It's not an easy stock to trade. Alexion, breakout. All right, this was one of the stocks that made it to my watch list. It's sort of one of the examples of the problems with healthcare in the U.S. and that the good news is they've got a great drug that cures lives and is very effective. It's called Solaris, and it takes care of patients that we previously did not have a good therapy for. The problem with this drug is that it's about $400,000 per year per patient. You take it forever. Their earnings are great. Their growth is great. It just took out 4 previous tops on Friday on the daily chart. I think Alexion looks great here. Gilead's one of my favorites. I expect the 50 to catch up to the price and the price to run again. Gilead gets all the bad press because of the expense of its drug. But hint to Congress, you created a law in 2003 that eliminates your ability to negotiate drug prices, so get over it. You have to change the law, and we know how long that's going to take. Sort of in a sideways motion, again, waiting for the 50 to catch up. Great earnings per share growth. One of my big holdings, one of my favorites. BioCryst, I always looked at this as a cancer vaccine company, but they have also taken a big jump, probably related to Ebola. Celgene, like Gilead, a large cap biotech, a leader, been going sideways, looking for a catalyst. I think Thursday was that, pulled down to 50 and bounced, gapped up on Friday, good earnings coming in. Celgene, clearly a giant and leader in biotech. Biogen IDEC, surprised it's pulled back this hard. This has been a great stock. So the orphan drug king in biotech. Love them, always have. I use weakness to build a core position. You could see lower left, upper right. This might be as good a time as any to start building your core position in a biotech leader. Regeneron, kind of like Gilead and Celgene, going sideways here, waiting for the moving averages to catch up. This is a place that continues to have innovative drugs. Most of them are partnered out, and you may not have heard of them, but you have heard of Sanofi. Amgen in sort of a flag formation up as an uptrend, looking like it's trying to go up as well. Certainly been one of the leaders in biotech over the last, 6 months, or 3 months in this case. So, biotech, strong. Go back, highlight the next one, which is infrastructure software, right-click, and this is all about PANW. Now, what I found remarkable about PANW today, I thought much of this story was hype, not hype, was story. I've been an owner of this on and off, and it had a huge day on Friday. This is MarketSmith, by the way. And I guess what's most impressive is the earnings per growth coming into the stock. A multiple of 245 is not sustainable, but if they hit that $1.38 and they're growing 80 to 100% time a year, it's probably got room to run. So they had pulled back in a flag, and then they broke out on Friday. Beautiful looking stock. Splunk below the 200. Oracle, not too exciting. Microsoft, nice lower left, upper right in a pullback. It looks like it wants to run again as well. All right. Right click back. Airlines probably benefiting from the cheap oil, but my goodness, if Ebola becomes widespread, these guys are one of the groups that are going to get killed. American Airlines has been in a downtrend for quite some time, since June. Looks like it's bounced. I'd like to see it get above the 50. Delta is one of my holdings, although I've got puts as well. Pull back to the 200. Had a nice long-legged doji there. High close doji on Friday. Again, it too has to get through its major moving averages before I'll be a believer. Oh, Southwest, that's probably the one I like the most. I won't fly them because I'm a snob, and I like having a seat, preferably wide one up front. But you could see they pulled down to the 50 and bounced on Thursday, took out the 8-day exponential on Friday. Great earnings coming into the stock. Again, unless there's an Ebola catastrophe, I would expect the airlines to really take advantage of the low oil costs. Specialty pharmaceuticals, the first 4 or 5 are all related to takeout stuff. So Allergan is being pursued by Valiant at about $185. I think this is probably where it was announced. They're fighting it. It looks like they broke out of recent trading range on Friday. Allergan has tried to buy, I don't think they were trying to buy Shire, but somebody's trying to buy Shire. Again, sideways to the right after initial pop on takeover rumors. Mallinckrodt bought Questcor. This one is interesting. Let's take a look at earnings going forward on this one. This was a spin out, I believe, from Covidien. And they did buy one of our favorites, which was Questcor, which could be a favorite long or short, depending on your thoughts about Acthar Gel. Look at the earnings per share coming in. If they make $6 and they only keep 20 PE, which is why would you do that if your earnings are growing at 50%? It's $120, $130 stock. So I think Mallinckrodt has got a lot of room to go. The issue at Questcor was always payers paying for it and the question about their pricing. Salix, another one that was in a bid. I think their offer is now off the table. Pulled back to the 50 and bounced. I'd like to see more constructive, but notice how it's obeyed the 50-yard line, or 50-day moving average. Kite's a new issue. We'll skip that. Jazz has been a favorite of mine for a long time. I don't have a position currently. You can see the major uptrend. It's been going sideways since February. One of these days it's liable to break up or break down. It's pulled back to the 50 and bounced. This would be an interesting time to get in if you wanted to own Jazz. Don't know much about this guy, but he's been nonstop going up ever since the IPO, which was in 2013. I thought they were a restaurant. That tells you how much I know about healthcare. And then Valiant, which is the potential acquirer of Allergan that came out with some great earnings as well as a drug in clinical trial, trying to demonstrate that they have growth on their own and don't need to do an acquisition. And their clinical trial drug looks very promising. Internet media, can you say Twitter? Twitter has been on fire. I don't know why I bought puts on this. I have a long position on Twitter, which I did from back in this area when it took out the 50. And it's obeyed the 50 several times. Pulled back some on Wednesday, looked good on Thursday and Friday. Volume coming into the stock. If you go out a year or two, there's actually some pretty good earnings coming in on this puppy. And this is kind of what I use MarketSmith for. One of the reasons to go and take a look at earnings out 2 years. You can see 37 cents with 200% growth rate. So that might be interesting. I like Twitter here. Yahoo, big play on Alibaba. I think they announced they got $7 or $8 billion from the IPO. They still have a considerable amount of shares. I think somebody was telling me that they have over $40 of value just in the Alibaba shares, and their stock trades for 41. So Yahoo gets about $1 in valuation, and the rest of it's just their investments. So Yahoo is a value play. Pulled back, broke out above the 17. I don't like the topping tail, but it looks interesting. Qihu sold off hard. Looks like it's bouncing. If you were short, I hope you covered. Although potentially it trades up to the 8 and falls off again. Google, I like this. It's going sideways, bouncing off the 200. I think it wants to go higher, but I need to see at least get above the 50 and the 17 before I'd even be willing to look at it any further. Baidu, I heard a lot of people talking about being a short on Wednesday as it failed the 50. Well, you know, it's got a doji right at the 50 on Friday. If it trades down from here, probably is a potential short if you're into shorts. If this market is strong, I'm not shorting much. And I covered almost all my shorts except for one I couldn't get out of on Thursday. Banks were strong, and I want to highlight Bank of America. I have a big position in Bank of America, one that I took several years ago. And if you don't remember why I took it several years ago, was $4.50, $5. Again, up here at $12 seemed like pretty cheap to get a franchise that's not going anywhere. Strong dollar likely benefits the big banks. Rising interest rates likely benefits the big banks. The fact that they've settled most of their outstanding liabilities related to Countrywide and other mortgage-related events is probably a good thing for Bank of America. So here's something to ponder. Bank of America closed at $17.29. If I look at, this is on a weekly chart. If I look on the daily chart, it was sort of a deep cup, sort of double bottom, doji on the long-legged doji on the 17, gap up today on Friday. It clearly looks like it wants to go higher. So let's say 1730. I was looking at options potential, and I saw something that I thought was intriguing. So let me size this appropriately. I'm a big bull for Bank of America. Now, I might be wrong, but I'm betting it's got a long ways to go. So Bank of America, come on, Jeffrey. As we said, it's trading at 1730-ish. I can buy some January 15 calls, let's say $17 calls, for 98 cents. Now, I'm buying a call that has a value, if I liquidated it without the rent, just the intrinsic value is about 30 cents. So I'm paying 68 cents, betting that between now and the third Friday of January 15, the stock is going to go up more than 17.98, which would be my break-even price. Now, the benefit of buying the option versus the stock is if I had $10,000 to spend, I could buy 600 shares of the stock. I'd participate in their small dividend. Nothing wrong with that. But for that same 10,000, I could control 10,000 shares or 100 calls at 98 cents. If the stock goes to $20 and I own 600 shares at 17, then that's 600 times $3, which is $1,800. If on the other hand, if I buy 100 calls, or 10,000, the right but not the requirement to buy 10,000 shares, and I buy that for the same $10,000, and the stock goes to 20, I will have 10,000 times 3, which is a $30,000 gain. The downside of buying the calls is I'm paying 68 cents to somebody who's given me the right but not the obligation to buy. He's got the obligation to sell, and he's betting that the stock's not going to go up. So I play options a lot directionally. Here's a scenario where I'm pretty certain the stock is going to go up, and all I got to do is be above 17.98 for me to break even on January 15th. To be honest, I even went down further, and I started looking at January 16th. And I said, you know, these $15 calls are going to cost me $3.25. So now my break even is 94 cents away. Is that right? 96 cents away. So I'm going to pay 96 cents in rent, and I'll have 466 days for my Bank of America stock to trade above $18.25. So I'm looking at doing some option plays because I believe in Bank of America. I believe in the U.S. banking system. And I look at this stock, used to be a $50 stock. It's taken its lumps. I think it's turned around, and I think this is an interesting thing. And I'm looking at options on Bank of America. JP Morgan, in an uptrend here, very loose. Pull back to the 50, bounced on Friday. Citigroup, seen a lot of positive things on Citigroup as well. All of them had the same pattern, pulled down the 50 and bounced on Friday. And Wells Fargo, not as much of a bounce, but has been a leader. So I'm thinking about banks, and to be honest, I'm thinking about Bank of America. But don't buy it until after I bought mine. It won't be fair. I'm the one that told you about it. Application software, there's a whole bunch of different things here. I don't know many of these stocks, and they're not, to me, this isn't a very good way of listing them. Demandware had huge volume and a big price move, 2 billion shares and a price move of $8.68 on Friday. Don't know anything about them, some e-commerce software. Salesforce.com looks kind of interesting. This has been a big player, but look at that nice weekly uptrend. And where do you want to buy it? You want to buy it on 50 weekly support. And where is it at right now? It just came off of that 50 weekly support on Friday. Gapped up here. It looks very interesting from a long-term perspective. This is what I do. Top down. I got to look at YY. Made a lot of money by buying YY when it pulls back to its 200-day moving average. What did YY do on Thursday? Pull back to its 200-day moving average. What did I do? I bought YY, or at least I bought YY calls. How do I play this? Simple. Simple, simple, simple. So I played it multiple times already. My stop is right about there. Okay, it's below the low on Thursday, and I'm buying this on the assumption that we're about to take off and we're not going to break down below that 200-day moving average. I will trail the stop up as I like to. I recognize that this is my first target and it may have trouble getting there, and I may have a secondary buy once it closes above that 50-day moving average. My target's up here, and I actually said I bought calls on Thursday on YY, one of my favorites. And it's several times it's given me these pullbacks to moving averages in a nice run. The last couple times been deeper pullbacks to the 200-day moving average. Right click and back. Entertainment content. I don't know this industry, but several of them looked interesting, and I think Scripps made it to my buy list. You can see a deep washout on Thursday, gap up on Friday on Walt Disney. The one that I liked Scripps and I liked MEG. But here's Scripps. Why do I like it? Because it's on support on the 200. Look at the volume that came into it on Friday on the daily chart. Like to see it get above the 50. Don't really love the earnings, but it looks interesting. And I mention John Person a lot, and I use his signals. We do not have them currently built into HGSI, and I've been working with John talking about potentially doing that. But one of the things I like about it is this is Genesis, and John has a lot of things that go into these signals. So, but what I do is I take my buy list or my big list that for my bottoms up review, and I toss them, toss them into Genesis, and I run John's signals on it. So I'm looking for that SNI. It's going to be down the bottom. And I'm not going to go into this. You need to come to John's meeting to learn about how he uses his monthly pivots for support. But there was a weekly buy coming off of this base on the 29th. This is a daily buy on the 29th. And we had a weekly buy as well this week. So these have been great signals. If I can find stocks that have both a daily and a weekly buy and buy them when either of their two signals hit, I've usually been rewarded. So will be going long on Monday rather on Scripps, barring market changes that I don't foresee. Back. Food and drug stores. I mentioned drugstores, specifically CVS. Let's take a look at Walgreens and CVS. Again, something I don't like with the current industry groups is they're lumping drugstores with food here. I don't get it. They also lump coal in with some of the oil and gas. Walgreens is no longer a pure play drugstore. They've got a major investment in ABC, AmerisourceBergen Corporation, with an option to buy most of the company. They've got a Boots Day acquisition in England, and they've sold off. They've also had some issue with controlled substances and the Fed. Nothing that Walgreens is doing wrong, because I was at Cardinal when Cardinal was involved with this, mostly about pill mills and whose responsibility is to recognize it. But Walgreens has sold off, but CVS looks great. Nice uptrend, chance to buy it off the 50. It's taken out its 17-day moving average. Let's take a look at a weekly. You can see how strong CVS is. As I mentioned, this was one of the stocks that I thought had a lot of upside from the Obamacare. And we're going to look at a couple more of these too before we're done. There's CVS. In fact, I'm going to move this to my other screen so I can see it, and I'm going to go through each of these in a few minutes. I think that'll be fun. I like having multiple screens. It's a pain in the, I'm not going to say the word because I'm being recorded. All right, and then you get Kroger's, which looks pretty darn good too. It looks a lot like CVS. That's on a daily, and here's a weekly, nice big uptrend. So that's another place that you might want to go fishing, so to speak. Department stores, Macy's and Nordstrom have looked good. I know John has a buyout on Kohl's, but it's been going for a week or so. Here is J.C. Penney. This was an interesting place to buy it here. I saw some targets of 15. It had a nice move up, sort of failed. Looks like it wants to try again. Here's Macy's. Similar pattern. It's at its 50. Breaks above the 50 on volume. Might be a nice place to jump in. And Nordstrom has done that. More volume on Friday, but the moving average broke above the 50. Sort of in a Darvis box here. Nice to see it clear some of its old highs. This is what top-down investing is. You identify the top industries and you go through them one after another. Let me show you why I like some of these healthcare stocks. I'm going to go to generics, change industry group, and a couple of the ones I like are here. So let's start with Mylan. Mylan, and I'm going to go to my charts now. I should have done this before. I apologize. Mylan had pocket pivots, kahunas, Bible gap up, mobile breakout from a squeeze, and mostly green up here on my technicals. It broke out of its volatility squeeze on Friday. I expect it to go higher. It's got earnings coming in. I looked at it on MarketSmith, and I think I was even more impressed. 18% on $4. It's got a 16 multiple. I mean, it's potentially a $60, $65 stock, so you got significant uptrend there. Look at the volume that came in on Friday. I got to speed it up because the good wife is on in a few minutes and I've got a date. Aetna is indicative of what I see in a lot of the insurance companies. They pull back. They're at their 50. Pocket pivot and kahuna on Friday. So it's a leader on everybody's board. Stock, I think, could do a little bit of work to get above its recent tops. That was Aetna. Here is Cigna. Kind of looks similar. Here is WellPoint. Right, a break above that PSAR would make this interesting. Mobile breakout from a squeeze, mostly green up above. Had a kahuna. I like to see it get above that PSAR dot. The other one I put on my list was Centene, which does a lot of the Medicaid insurance. And shallow pullback. Again, I like to take out the PSAR dot, but that one looks better. So I like WellPoint and Centene, but the others are interesting. We already looked at Celgene, Gilead, and Alexion. Here's another one I'm playing on Monday. This is Achelon Pharmaceuticals. And Achelon, give you, try to make this, that's what I want it to look like. Gapped up, sideways, 50 caught up. Gapped up, it's pulled back, 50 caught up. I look at sort of a gap up on Friday. Technicals don't look so great. It's underneath the PSAR dot. I've played this a couple times already. I think it's going to move up again. They make a Hep C drug that is apparently almost as good or as good as the Gilead drug. I hear a lot of good things about this company, and what a great time to buy it as it's moving up off of its 50. The other one that was on this list was Acorn, AKRX. Again, nice uptrend, pull back to the 50, couple of kahunas, mobile breakout from a squeeze. I think that one wants to run. Lanet has been one of my favorites in the generics. And as you can see, it's pulled back, had a doji on Friday, pocket pivot. Not necessarily as good as those and ready to go, but we'll be watching that. Activist, ACT, one of the leaders in the generic space with great earnings coming up, lower left, upper right, one of my favorites, mobile breakout from a squeeze, pocket pivot, kahuna, positive on balance volume, like that one a lot. Hospitals are going to do well. Tenant. Uptrend, pull back to the 50. I'd like to see some momentum come in, but that looks like it might be setting up, as is HCA. Uptrend, pull back to the 50. It had its kahuna. I think this one continues to run. And lastly, in a business I know well, drug distribution. They make money no matter what drug is used and where you use it. AmerisourceBergen, flat uptrend to the 50 caught up. Mobile breakup from a squeeze. Pocket Pivot and Kahuna on Friday. Great earnings coming in. They probably pay about 2%, 1.2% dividend. McKesson, similar pattern, run somewhat sideways. Mobile breakout, Kahuna, Pocket Pivot. Everything looks good above. Great earnings. They have a combination healthcare, technology, and distribution. And lastly, the one that I sold my last company to, Cardinal Health, which was been in, they're all the same. They've all been in huge uptrends and have been going sideways, and I think they're ready to run again. This is Cardinal Health. Remember, the Eurekas and Phoenixes are on the market, not on the stocks themselves. Let me just take a quick look at my buy list and see if there's anything I forgot to tell you about. And then I'm going to go watch The Good Wife and ship this out when we get done. So, to my buy watch, here it is. You can see almost every one of the ones that I've talked about are on my buy watch list. I think we're pretty good. Just because it's on my list doesn't mean I'm going to buy them. It means that I'm going to watch them, and if they meet certain criteria, I may buy them. I did my group inclusion filter already this evening, just to show you what my GIF All-Stars were before I say goodnight. Again, many of the same stocks we've already seen. So at this point, I'm going to do my concluding remarks. Let's take a quick look to see if the futures have changed at all. They still look about the same, up a little bit. I expect rising dollar to ultimately be a headwind on the market. Will also pressure oil and gold further. They're all down overnight. But I think we are in another leg up. How far we go and whether or not we have a big pullback coming to be determined. But I wish you well. I hope to see some of you this weekend. I am going to be on vacation and not doing this for the next 4 Sundays. If I get internet access where I'm at, and if I have a chance, I will put something up. But if not, I'll see you back in the middle of November. Good night, everybody, and safe trading.